Hello, everyone, and welcome to another edition of the Pure Investments Podcast. I'm your host, Khy, and I'm here with Bowen.
Hello.
And we're coming to you with another edition of the podcast. So, just like last week, not a whole lot's happened. We kind of had that, weird, I want to say last time we spoke, we were probably right up around here, like 6,700, right?
Yeah.
If that sounds about right. So we kind of were flagging along this way, and we had this huge drop-off. Was that Saturday or Friday? Friday was the huge drop. And since then, we're kind of just doing the same thing. So the one primary thing, I guess, to point out right now is that we're still in this bear flag pattern. You've got bear flag here, which is bear flag 1. You got another one here, bear flag 2. Bear flag 3, and now we're forming another one. However, they are kind of getting smaller and smaller. The last couple drops were several days of red followed by flagging, whereas this one was literally just one big day, and then we started flagging sideways. So as opposed to a whole week of red and then a few days of sideways and then a whole week of red and then 3-4 days of red, this one was one day. So not that it necessarily means anything, but in a perfect world, it means that there's a little bit of steam being run out there. As you can probably tell, there are a ridiculous amount of lines drawn on this Bitcoin chart right now.
For the record, I have even more lines drawn on mine. We condensed it for this podcast.
Yeah, I had to shoot him down on some of his lines because there's just too many lines. It would start to get confusing. This is confusing enough as it is. So I guess let's start with what we kind of left off with last week, which is this blue line here. And that is the old log downtrend line that we broke over and retested. And if we zoom in real tight here, you can actually kind of see that we retested it almost flawlessly, right? On that big red day here where we hit 57 something and bounced right off of it. So that's another retesting. You basically have two confirmed ones and almost a third right here even. Where we got, within $60 of hitting it and bounced a little bit earlier than that. So that line to me right now is one of the more important ones. And it's definitely the primary line I'm focusing on. The horizontal lines here are the support zones that we've identified. So the first one would be this almost triple bottom here at 5,800. Again, we came $100 off of it back in, February. I'll count that, with something like Bitcoin where the movements are so volatile and where the movements are slightly different exchange to exchange, you kind of have to give a little bit of leeway on those line taps simply because they're not, tied to one central exchange like a stock market. They are, Coinbase. If I drew this on Coinbase, it might line up perfectly at 5,800 for all three of those, or it might be 6,000 for all three of those or something, so on and so forth, but you kind of get the idea. So I'm willing to give it a little leeway and say that you have one bottom here before the big run up to 20K, another one here on our big tank, and then this last one here after all of this minutia for the past, 6 months.
And we'll see if it holds. That's another note it's not a definite triple bottom yet. Although currently it does appear to be, because we had a beautiful bounce just recently off of it. It's not officially triple bottom. Currently it's kind of weak double bottom with that middle being iffy. Yeah. But if we have this be confirmed, it'll be a strong triple bottom. And yeah, what you were saying about that, support and resistance lines, you really want them to line up just right, especially on altcoins, because those are generally controlled by someone, who wants it to look just right. Versus this is Bitcoin. There's too many different huge players playing to make it line up perfectly.
Correct. Again, the primary thing is more the difference of exchanges that causes problems with that type of stuff. Some exchanges are more volatile than others, and I mean, we've also seen where in one case Bitfinex will be more volatile than Coinbase, and in another Coinbase is more volatile. It really depends on the day for some reason. There's no rhyme or reason to it. It's just how it works out. So that's basically our first big support line here, because as of right now, that's the most accurate one because we haven't gone below it. Your next ones basically would be this 5,000 mark. I mean, I have it at 49.33, but for sake of rounding, we'll call it 5,000. And that is, this support or this resistance back here rather that we broke through over here. So, we tapped this, fell down, and then this was the breakout right here after about 3 days of bumping into it, where it ripped up to this, 5,800 support / resistance line that we have here.
Yeah. And another thing about that line that I wanted to mention is, I have the log line drawn on my graph that extends from all the way back when, that kind of carries through the support. I believe it's what you have purple. We have it drawn in slightly different locations.
Yeah.
But for me, we have it drawn in very different locations, actually. For me, the log line pretty much perfectly matches up that if Bitcoin continued on its general current trajectory, it would end up at that 4,900 mark, and hitting that log graph on about the 10th month of this year.
So ours isn't too far off then, because I have mine hitting 4,900 on 10/19, basically, is where they coincide.
Look at that. Yeah, and I have mine on 10/08.
So not too far off. I mean, that's literally
and for
like
my log line, that's exactly where it hits. If we generally keep up that kind of trend, that would be where it hits, and that's kind of what makes that line significant. But that being said, that's more of an expectation than realistically a very strong point. If you notice on Khy's graph here, it really only has one strong touching point, and that's it. So that's the only reason it's kind of there.
Which, I mean, let's get the more doomy gloomy side of it out of the way first. So if we were to break below this 5,800 mark, it's important to realize that these next two support lines are not very strong.
Right.
Your next strong support line is in fact right around here. If I could get the magnet tool to behave, at like 3,000. So that's your next strong support, because you've got two tops here, really three, and then the breakout, and then the retest right here, and then the bounce off of that. So this is really your next strong support if for some reason 5,800 didn't hold.
But I will mention there is another reason why 44/4,500 is strong.
Well, because you have these,
technically, like you said, it really isn't that strong. But what makes it so strong is during that last bear period, which a lot of people have compared us to back in 2013, end of 2013, all the way up until 2015. That bear period lasted approximately 665 days and was approximately an 80% decrease. If we had the exact same thing happen, and what are the chances of that? Very low. But if we had that happen, we would actually end up at around that same point. So if we had, again, around a 78% decrease, 78% or so, we would end up at around the 4,500 mark, which is why that point is kind of strong.
So you're saying like here then?
Bingo, yeah. But then the time frame would have to be triple that, which of course we're all hoping that's not the bear period that's going to ensue, but we'll see.
Time frame, you got to remember, as we've spoken about before, the time frame of that previous bear period was definitely met with a lot more challenges. Pretty much a whole year of time was lost after Mt. Gox. So that's a little bit of a different scenario. We don't have that weird period where like you're basically not trading crypto for a year because you can't. When Mt. Gox crashed, I mean, you were pretty much regulated to Silk Road and stuff for trading and like forums and stuff like that. So there wasn't really like any well-regulated exchanges up at that point. And that really, I think, is what extended it. So I don't see a reason to say that we would need to look at the 600-day.
I absolutely agree. I think that's a great point. And that's something that we discussed, I believe, in our last podcast, was there were so many things that happened in that time period, mostly Mt. Gox, but also other issues along the way. When the Mt. Gox thing happened, it wasn't just an isolated event. The news sources then just took that and kept running with it, which perpetuated Bitcoin and crypto into this negative cycle. Versus right now, we really have nothing. The biggest FUD was, or one of the biggest FUD was probably the whole securities thing, which was fine in the end. The other one, the South Korean hack, which ended up being okay. So the FUD we're having now is so much more minute. I would absolutely agree that saying another more than 600 day bear period is highly unlikely. And that also being said, the fact that it will drop exactly the same percentage is also quite unlikely. But that's another reason that we
Yeah.
have that 4,400 or 4,500 line there.
Hmm. Yeah, I mean, right now, there's a couple things at play that I'm curious about.
Yep.
One is still, and this is still very much in play because it looks like it's further away than it is. But there's still the possibility that I think I discussed last week of breaking back into this primary white triangle here, um,
Hmm.
and breaking out over this. I mean, the longer and longer we don't do that, if we get to like the day before July 1st and don't do that, it's probably going to be less likely. Not to say that Bitcoin hasn't had, 15% gain days, which is really, I believe, about all it would take, if I'm not mistaken. Let me just double check here. Yeah, you're talking a 15% move. So it's not, unprecedented for it to
Hmm.
break back into here, but it's definitely one of the lesser possible ones, but still something that I'm watching for, which would
Yep.
confirm that, the bull trap bear trap scenario that I've discussed at length. Um, and then the other possibility here is kind of this red line that I have drawn in conjunction with the white line, which is this small falling wedge here. And I mean, there's probably a slightly better way to draw the top here. I'm using my little bull trap line here, um, for no real good reason, to be honest. Um, like, I mean, in theory, you'd probably want to draw it somewhere more along like this line.
Yeah.
Um, the only problem, I mean, I guess technically you have three taps. It's just very short and steep, whereas this line's not. But somewhere along here, and if you look, they both do coincide really well with this 5,800 number. So even though this one's dragged so much more out, and same thing with this, like it doesn't actually matter because they both kind of tap this green line here at 5,800. What matters more so is the time frame. If
Yeah.
if the longer one plays out, you're talking possibly like as late as mid to late August,
Hmm.
of a breakout potentially off of this falling wedge. And if the shorter line plays out, you're talking 2 weeks from now.
Yeah.
That July 12th, 11th, something along those lines. So those are definitely two things that I want to keep watching as well because they are good patterns. The falling wedge is definitely there. It wouldn't be the
Yep.
first time that Bitcoin's ignored a falling wedge or a rising wedge for that matter. So it's not the end all be all, but in general, wedges do tend to be pretty strong patterns. But Bitcoin's been known to blow up TA like that before. Um,
Yeah.
but
So,
this
something.
1,500 line. Oh, go ahead.
Oh, I was just gonna toss something out that, this is kind of on a different note, but like just talking about technicals again.
Yep.
I was looking at the monthly, which I know is rare to look at in crypto at all. But I was looking at the monthly, and I was looking at some volume indicators, given that I figure other indicators really aren't going to be helpful on the monthly. Nobody else is watching it.
Mm-hmm.
But I was looking at MACD just because MACD is a good general reader. I was looking at CMF and OBV and KVO, which so besides MACD, the three of them I just named were all volume indicators or oscillators.
Yeah.
And we're having the first bearish MACD cross in the monthly we've ever had. What does that
Interesting.
actually mean? I don't think it means anything from a technical perspective besides that, look, there it is.
Yeah.
I remember when that was happening on the weekly, everybody was freaking out, and now that's happening on the monthly, nobody's noticing, which I think is very interesting distinction. Again, shows nobody in crypto looks at the monthly. Another thing I was looking at is what you have popped up right there. Stochastic RSI, for the first time since forever, is bottomed out. It really has
Mm-hmm.
been forever. The stochastic, on the other hand, is still around in the middle. I think it's about 35.
Yeah.
But the stochastic RSI, which I use much more in crypto, is bottomed out. And then the next three I was going to talk about are all volume indicators because volume indicators are a better sign than technical indicators. Technical indicators, it's different. To put it the short
Yeah.
way.
I'm trying to
But I
see
was
if there's
looking
an
at
older chart though.
I think
This is obviously not active at all, but I'm just trying to find because I want to
Bitstamp.
see something, and I'm trying to think if there's an older chart that would be there besides.
Bitstamp is the oldest, I believe, that they have on TradingView.
Is it
If
okay?
I
So
think
this
so.
is what
Since
I wanted to
2011.
see, kind of. So Yeah, here we go.
So if we look, it's the first bearish cross we've ever had, unless you really want to count when the lines first appeared, which, eh, you could. And if we are, which it is true, because if the lines have appeared, that it does mean that the calculations are real. Then yeah, we'll see that was the first bearish cross, and then we can see what happened. But that's again during the same Mt. Gox time. And then going back to what I was saying about the OVB, so the on balance volume, is even though we've seen this bear period, the OBV is still as high as ever. The volume is still there. The hodlers are still holding. The people who believe it are still believing. The price is just being brought down. Even though the people who have it are still holding, which is different because during that bear period you're currently highlighting, the unbalanced volume was lowering drastically, showing that people were not trusting it or getting rid of it, which is very different from now. On the contrary, the CMF, which also dropped during that bear period earlier, is once again dropping, which to me shows that it's getting ready to reset. Because OBV, for those who don't know, essentially the CMF is like a filed down and nice inversion of the OBV. So the fact that the OBV is still strong basically to me says that people believe in the tech, still believe in the tech. And the fact that the CMF is going down says that the sellers are finally being able to lower the CMF, like how all indicators need to reset. And then the KVO, I was also looking at the monthly, and the KVO, because of its longer algorithm, don't need to get into that, has barely displayed anything. But we are seeing it already at an extraordinarily low, our extraordinarily descending rate. So watching the KVO, there it is. So you can see we barely have anything popped up. But the fact that we already have such a big gap between them shows to me that we have a lot of space, again, to move back up. But the KVO is the only of the three volume indicators I just discussed that is bearish. The other two are quite bullish.
What I kind of find interesting, so in theory, all right, so there's two ways to look at this, right? One way is that the last MACD cross happened after 243 days, the last bearish MACD cross. As you said, it's hard to be reliable considering it was really the start of MACD on Bitcoin.
Yeah.
On this chart, you know what I mean? It kind of just started out
and it was
bullish.
during that Mt. Gox FUD period.
Correct.
And the calculation did start, so it is accurate, but it's the very start of the graph. And I honestly never trust the very start of indicators.
No, absolutely not. Because if you looked at any altcoin from that got listed in November, everything was through the roof. You know what I mean? So that's just, it's a little bit tough to look at those. But one thing I wanted to point out was that, the month ends in, 4 days, 5 days? 1, 2, 3, 4 days. So 4 days is when the month ends, right? MACD won't actually cross down yet. It'll open July basically slightly down. But if July were to be a big green month, it would actually bounce the cross down.
And so that then brings the question, as you were talking about, which I was eventually getting back to, that descending wedge, right? That's what you were discussing.
Yeah.
And so currently we are at the bare bottom of that descending wedge. So much so that the old wedge that everyone had drawn was broken downwards out of. And now we have a new wedge that's a descending wedge. So if right now we saw for the next 4 days sort of dwindling and then returning to that bottom line, and then with the new month, a huge rally back up and through the descending wedge, breaking up to maybe even 7K or higher, breaking out of this descending wedge, we will not see a bearish MACD cross. And if we didn't see that, that would be huge, because who is checking the monthly MACD? Because I'll tell you, it isn't almost any crypto investor. It isn't institutional investors who are used to stocks, who are used to checking the monthly, because the monthly on stocks is quite reasonable. Crypto is the only market where checking the monthly is weird, because it's such a new market. But now that it finally is appropriate, you are going to see traditionally stock or traditionally institutional investors look at this monthly chart and say, hey, look, we actually bounced off of that. If we could break out of this descending wedge, that would be a very bullish sign.
Yeah. Also, if you look at this weekly candle, it's kind of interesting. It's almost like a gravestone doji.
It is. It is. Well, we'll see.
Almost.
Really.
Yeah, I mean, the weekly doesn't close for a few days, 4 days. We just discussed this. I'm like doing the math in my head again.
But But like you were saying, since last podcast, really not much has happened because if you
No.
look at that weekly candle, literally nothing. It is flat. We are seeing such market indecision like we haven't seen
Yeah.
in weeks. And when I say weeks, I mean, if you look back, I literally don't remember the last time we have had a flat Bitcoin weekly candle. This is such a huge period of indecision. If you look at the volume, we are just dwindling, kind of waiting for some kind of movement. And
Basically,
even
the
on the squeeze
closest.
momentum, we're seeing those gray diamonds. I don't think they have a fancy name, but those gray diamonds line up, you know?
Yeah, the closest we would have is back here in April before that mini bull run up to 10K.
Yeah.
Past that, there's been not nearly as much indecision on the way down here. And
Yep.
I mean, you can see, you got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So 9 weeks straight of more or less just red movement, besides that one mini green week there, which I don't even remember. It feels like decades ago.
Yeah.
Where was that? Was that this little period, I guess? Right?
I have no idea. There was a green bit. It was nice, and then it went
Yeah.
away.
And like when you look at it on the daily chart, it doesn't even look like much, right? Like it was like a $500 green week. So
I
it
remember
wasn't.
people were freaking out. It was fantastic, and then it
Yeah.
was gone. And I was like, guys, this is gonna end, and then it ended. People were like,
Yep.
oh, why didn't you tell us? And I was like, I
One
did.
thing that I will point out, I'm gonna kind of close out some of these indicators here, just because it's sloppy to look at. So you
Yeah.
can see here on MACD. I'm gonna expand MACD a little bit so that we can see it better. How it's squeezing here. If you drew like something kind of like this, it's more like that. MACD is just getting squeezed down basically, almost into like a falling triangle here, or a descending triangle rather. And you can see it in the oscillator too. I mean, look at how big these peaks were, right? And then all of a sudden they're like these small little crosses over and over again. Cross up for a few days, cross down for a few days, and now we're getting ready to cross back up. And eventually this is just going to flatline, and it's going to have to pick a more realistic direction, right? Like you can't just keep these like cross up one day, cross down 2 days later, cross up 2 days later, cross down 2 days later. That eventually you'll have to stop. And I couldn't even find, like looking back, like historically, a period where this really happened like that.
Yeah, and it didn't.
It's really
Unless you look
weird.
back to the only time it did happen, is if you look back again to the Mount Gox bear period.
Mm-hmm.
And it's so hard because the only time period we have to compare all these technical indicators against is the Mount Gox bear period, which, as we've said, is not a fair comparison.
Yeah.
Yeah.
One thing that you can point out a little bit here, right, is this period. Oh, it's gonna make me bring all these lines back. But anyway, basically from this point to this point, is a very slight decrease in price. Not a lot. I want to say it's like $200 or something. But if you look at the MACD, the differential is huge. Like the divergence is insane.
Yeah.
Because basically it's just I guess you would call it exaggerated divergence. Wherein, the price is kind of flat on the bottom here. You're talking a difference of like $100, $200. Again, like we discussed before, this 5,800 mark is basically what we're playing with here.
Yeah.
But the MACD is clearly on a gigantic incline, which would be an exaggerated bullish divergence.
Yeah.
And that's not a, hourly divergence or even like a small daily divergence. I mean, you're talking almost 4 months, 5 months of divergence there. So that's definitely something to keep an eye on. And I mean, you're not going to see it on any longer time frames because, once you zoom out, I mean, the weekly is a mess right now, as far as MACD goes, at least. But it's just something I kind of wanted to point out because that is a very, very large divergence. And it's
Yeah.
not something that you see every day on a daily chart.
Yeah, and going back to what you were saying, or what you're just showing, excuse me, on the weekly chart, the MACD is below zero.
Mm-hmm.
And as anyone who has traded with me knows, before our bear period, I used to use MACD all of the time on various cryptocurrencies before the bear period. And as soon as the bear period started, MACD was really not working so well. But kind of going back into that bullish mindset of which indicators work, because which indicators work changes in different bear and bull periods.
Yep.
The MACD is now below zero again on the weekly, and that's
Yep.
huge. We haven't had this in a long, long time. Am I saying it can't go lower? No, it can definitely go lower. But the fact that it's as low as it is a really great sign for Bitcoin and its price action. Every single indicator on, not every, almost every single indicator on almost every long time frame is
Yeah.
showing that we are ready for a reversal.
Mm-hmm.
My thought is once every indicator shows on every long time frame that we're ready for a reversal, that's when one will happen. Because realistically, that is the most likely option. Excuse me, I
Yeah.
had to rub my eye for a
No,
second.
it's fine.
Yeah.
One thing I'll point out here, just for a showcasing of the power of divergence, right? So the blue lines are our previous divergence, and we will make these yellow. No, it doesn't want to change the color because I'm drawing a new line. My bad. So we'll make these ones yellow, and I'm going to just show you kind of the divergence we just discussed and a prior divergence that was probably missed by a lot of people. I didn't happen to notice it until like a couple days later.
Khy, another thing is if you don't draw that to the wick and you draw it to the candle
I'm trying. It's locked.
on the left side,
Oh, like that? No,
you
you wouldn't
could.
draw it like that. No, I wouldn't at least. Personally. I
Teach
mean,
their own.
you can. It doesn't matter. I mean, either way, it's still a divergence, right? It's just a difference of exaggerated versus regular.
Yeah,
I see what you're saying. Like, if you draw it like this, basically, it's just this is a standard divergence.
yeah,
Versus if you draw it like this, it's a exaggerated divergence. But either way,
yeah,
the point still stands. Both are bullish divergence signals. But these blue lines were a clear hidden bearish divergence, right? So wherein you have this upper price here and a lower price here, whereas MACD was actually raised during that period. Um, so clearly, like that divergence was there, and it was readily available for the taking if anybody had noticed it. Now, that's not to say that people didn't call the top at 10K for other reasons. I mean, I know I did, and I know a couple other people did. I'm sure more than a couple, but you know what I mean. But this was like another pattern here to look for, and we're seeing now the longer trend is this extreme, exaggerated, or regular, however you want to look at it, bullish divergence pattern. And I
yeah,
think that's really important to look at because typically, at least when you look at TA, the older and wider pattern, like the longer term pattern, will end up winning out in the end. Whereas this pattern was a couple month bearish divergence, this one is a half a year bullish divergence. And I think that's something to keep in mind, because this could in the end be what a lot of people are missing out on that are still bearish.
yeah,
And that also kind of goes into what I was saying about MACD squeezing. The reason that this divergence is forming is because of the squeeze, basically. Because these drops aren't causing MACD to drop as much, that's what's causing the divergence to form. And that divergence is forming because of the basically almost lack of volume, more or less. And we've kind of discussed that at length. But I mean, the volume is just significantly lower week to week, month to month than it had been. I mean, here's the monthly volume if you want an idea. Every single month since the top basically has been lower and lower volume. Every month, lower volume, lower volume, lower volume, lower volume, lower volume. Like the whole berry period has been monthly lower volume after lower volume.
yeah,
So at the end of the day, I mean, we're back to like 2016 levels of volume now. But what we want to see, and you might even see one more really small, like kind of like this pattern here where you get like a real small volume month. I don't know if that'll happen. I just don't know that there's, back in this period, there was a lot less people watching Bitcoin and trading Bitcoin and looking out for it. So I don't know that we'd get that, but eventually you're going to see this start to curl. You'll see the
yeah,
volume start to curl up and almost make like a cup in the volume lines.
yeah.
And
And
that's the period that we're waiting for.
yeah, and to add one thing to that, that doesn't necessarily mean the price won't start moving up before the volume moves up.
Correct.
Um,
I mean, you could see that here just looking at the
yeah,
past history. Volume
yeah,
was moving up slightly,
yeah,
but I mean, this volume still paired in comparison to this volume, but
yeah.
it still, those 4 green months were 4 small volume months. You know what I mean? And then the volume really took off. So it
Yeah,
can ramp.
and looking at these quote unquote, but also you're right, but small volume months, they're a very small volume. But from when I would say the small volume started to when it kind of ended, Bitcoin had over 200% growth. So if you're just looking at money growth, we could see that happen. But to see real, huge, volatile movement, like crypto traders are used to, you're going to have to see the big volume rather
Yep.
than steady growth, which I know I would honestly prefer steady growth, but with the huge amount of volume that we have, we're just not going to see it.
Yeah.
Well, if that comes back, I should say.
Yeah, for sure. So I mean, I don't know if you had anything else you wanted to discuss. I don't. Similar to the past few weeks, I don't see a reason really to get too into alts or Ethereum or anything of that nature. Right now, Bitcoin's all that matters. And until that day changes, my alt slash Ethereum, Litecoin, all that is going to be the same. It's
Yep.
not a bad time to be slowly accumulating that now. You know, uh, it's kind of a risk analysis on your part. If you think there's a chance of us falling to that 4,800 mark, do you want to wait it out? If say you see it's 50-50, right? If you buy here and it bounces, at least you're in some. If you wait till down here and it never gets down here, you're kind of screwed. Whereas if you buy here and it doesn't bounce and it gets down to 4,800, as long as you didn't go all in and you scaled a little bit, you could still buy more at 4,800.
Right.
But at least you've got a taste of the pie in case the other 50% of that side is right and we actually bounce here. So it's kind of a risk analysis as to how risky you want to be. I think I made the analogy in our premium chat that it's similar to kind of like do I want to go skydiving type of thing. You know what I mean? If you think the thrill's worth it and you're willing to take the risk, that's fine. But if you've got 2 kids at home and you don't want to take the risk, then don't do it. And it's kind of like that. So,
Perfect.
You have to make your own risk analysis. That's why we always say it's not investment advice. Because for me, I'm willing to risk a 15% loss just so that I'm in if we end up turning up here. For
Yeah.
you may not be willing to. You may want to wait till the absolute bottom. Just bear in mind that often when you wait to the absolute bottom, you're still not going to buy.
Yep.
And that's like the old adage of it's better to be in the market,
Yeah.
because if once we get to 4,800, are you going to actually pull the trigger and buy, or are you going to sit there and say, well, maybe we'll go to 4,500, or maybe we'll go to 4,000, or maybe we'll go to 3,000, and
Or maybe
keep
we'll go to
holding out.
100.
Yeah, and keep holding out and keep holding out and keep holding out, and then eventually there will be a turn. No matter what, there will eventually be a turn, and then it's too late. You can't really wait to know what the market's going to do. That's not how trading works. Once you've figured out what the market's going to do, the games are already missed.
Yep.
That's why you didn't want to be the people investing during this whole path. You want to be the guy who was buying down here, or way back here, or one of those people. You don't want to be the guy buying right up here. Even down here is a fine place to have bought. You don't want to be the guy buying here. You want to be the guy buying here.
Yeah.
And that's an important thing to take into account. You don't want to be the guy buying up at 20,000 because, man, I finally know where the market's going, and then it goes to 22,000 and crashes back to 10. You want to be the guy who's buying it at 6, is holding through a little bit more of a storm if it comes, and is ready for whenever the eventual turn comes, whether it's next week, next month, or next year even. As long as you have the ability to wait and you're doing what we always tell you, which is never invest money you can't afford to lose, then you can afford to wait and be in the market and just let the market come to you, as opposed to trying to best guess what the market's going to do.
Yep. It was Charlie Lee who said, if you aren't willing to hold through a 95% loss, or maybe he said 99% loss, then you shouldn't be in the crypto market.
Yep.
And I think that's absolutely true. If you aren't willing to hold through, and not when you're at that 99% loss, say, I should sell, it's not worth anymore, but hold through. If you're willing to, then welcome to the crypto market. If you're not, then I'd suggest not.
Yeah, and one thing, if you bought in up here and you're still holding here and you're thinking about selling, not investment advice, but don't be stupid. Like, at this point, you're 75% down. There's not much more loss that can be incurred from here. If you've held through all of this, you might as well just wait out the storm, right? Like the storm's almost over. You're basically like you see the shoreline after being in a storm for the past 48 hours in the middle of the Atlantic, and now you're jumping off the boat. Like it doesn't make any sense, right? So
Yeah.
Now if you sold up here, now's the time to get back in probably, or at least in the next few weeks, month.
Scaling.
Scaling like we said, but it's really hard to tell exactly when it'll turn. We've given you guys a bunch of scenarios, but I mean, I'm gonna keep giving the same speech at the end of every podcast until we do that turn because it's important.
Yeah.
And so I think that'll about cover it for this week. So that's the end of the podcast, and we will see you next week. Goodbye.